The stock market is a roller coaster of emotions, and Thursday's trading session was no exception. But here's the twist. Regional bank woes send shockwaves through the market, sparking a sell-off. U.S. stock futures took a slight dip on Thursday evening, following a tumultuous day on Wall Street. The catalyst? Growing concerns about regional banks' lending practices, which fueled a market-wide sell-off. Dow Jones Industrial Average futures slipped. SP futures and Nasdaq 100 futures followed suit, all edging lower. In the after-hours trading frenzy, Interactive Brokers Group and Oracle slipped despite positive news. Interactive Brokers reported strong quarterly results, yet its shares fell. Oracle, after revealing its long-term financial outlook, saw its shares slide. And the drama didn't end there. Drug makers Eli Lilly and Novo Nordisk faced pressure after President Donald Trump hinted at negotiating lower prices for their obesity drugs. The previous day's trading was a sea of red. All major U.S. stock indexes closed lower, with bank stocks taking a significant hit. The Dow, SP 500, and Nasdaq Composite all settled in negative territory. Shares of financial giants and regional banks tumbled after Zions and Western Alliance disclosed bad loans, raising concerns about lending practices and sparking fears of further issues. The banking sector's unease was palpable, with the SPDR SP Regional Banking ETF losing ground for 4 straight weeks and dropping over 6% during the session. This uneasiness was further exacerbated by recent bankruptcies in the auto industry. But wait, there's more. The Cboe Volatility Index, Wall Street's fear gauge, spiked, while Treasury yields and the U.S. dollar weakened. In contrast, gold prices soared to new heights, indicating a flight to safety amid uncertainty. Ann Sonders, a strategist at Charles Schwab, pointed to speculative froth in the market, with investors favoring riskier stocks like quantum computing and unprofitable tech. And this is where it gets controversial. Sonders noted that this froth is now concentrated in smaller market segments, like the Russell 2000 index, which hit a new high. But is this a sign of a healthy market or a bubble waiting to burst? Adding to the mix, global trade tensions, lofty market valuations due to AI hype, and the ongoing government shutdown have kept investors on edge. The shutdown has halted critical economic data releases, leaving investors in the dark. Despite the turbulence, the SP 500 has climbed nearly 1.2% this week, thanks to strong earnings. The Dow and Nasdaq Composite have also made gains. But will this rally continue, or is a market correction looming? After the market's close, several stocks made headlines. CSX Corporation's shares soared on strong earnings, while Interactive Brokers and Oracle saw after-hours declines. And the story doesn't end here. What does this mean for investors? Are these moves short-lived, or is there more volatility ahead? What's your take on the market's recent volatility? Do you think the concerns about regional banks are justified, or is it a temporary blip? Share your thoughts, and let's spark a conversation.